Mark Reynolds believed he understood risk. He wasn't reckless. He wasn't impulsive. He was calculated. For 8 years, he traded stocks professionally. He studied charts, read earnings reports, analyzed global trends. He didn't gamble. He invested, and by 2020, it paid off. His portfolio crossed $1 million. By 2021, it crossed 3 million. Then, crypto exploded. Bitcoin was everywhere. Ethereum headlines dominated news cycles. Influencers were turning small investments into fortunes overnight. Mark didn't ignore it. He studied it. White papers, blockchain models, market sentiment. He convinced himself it wasn't hype. It was the future. At first, he invested cautiously, $50,000. Then $100,000. The returns were aggressive, fast, addictive. In just months, his crypto portfolio alone crossed $2 million. That's when discipline began to fade. Greed doesn't arrive loudly. It whispers, "What if you doubled this? What if you went all in?" Mark didn't go all in. Not yet. But he increased leverage. Margin trading, high-risk derivatives, futures contracts. He wasn't just investing anymore. He was amplifying exposure. By early 2022, Mark's total net worth was $5 million. On paper, he moved into a larger home, upgraded his car, started speaking confidently about financial freedom. Friends asked for advice. He gave it freely, because when numbers go up, ego grows too. Then came the warning signs. A major crypto exchange paused withdrawals. A stablecoin depegged. Rumors of insolvency spread across financial Twitter. Mark saw it, but he dismissed it. Market fear. Temporary volatility. He had seen crashes before. He believed this was another dip. An opportunity. Instead of reducing risk, he increased it. He doubled his leveraged positions, borrowed against his portfolio, convinced himself recovery was inevitable. But markets don't care about belief. They care about liquidity. On a Tuesday morning, Bitcoin dropped 12%. Altcoins fell harder. Mark's phone buzzed non-stop. Liquidation warnings, margin alerts. His leveraged positions were bleeding. He transferred more funds to maintain collateral. The market dropped again. Another 15%. Within 12 hours, over half his portfolio vanished. But it wasn't over. The exchange froze trading temporarily. Liquidity dried up. Panic spread. Prices cascaded downward. Stop losses triggered automatically. Positions closed at massive losses, and in just 48 hours, $5 million turned into less than $300,000. It didn't feel real. Mark refreshed his screen repeatedly. Numbers didn't change. He called his broker. There was nothing left to do. The leverage that once multiplied his gains had multiplied his losses. But the financial loss wasn't the worst part. It was the silence afterward. The embarrassment. The ego collapse. He had convinced friends to invest. He had spoken publicly about strategy. Now, he avoided phone calls, avoided social media, avoided conversations about money. The house he upgraded to sold within months. The car gone. Investments liquidated to cover debt. Because leverage doesn't just erase profits, it creates obligations. Mark didn't just lose $5 million. AO had money psychologically. The crash was devastating. Sleep disappeared. Anxiety replaced confidence. Charts once felt exciting. Now, they triggered panic. He replayed decisions in his head. If I had reduced exposure, if I had ignored leverage, if I had sold earlier. But markets don't rewind. Financial experts later described the crash as predictable, overexposure, high leverage, overconfidence, classic cycle. But when you're inside the bubble, it doesn't feel predictable. It feels justified, rational, smart. Until it isn't today. Mark still trades, but differently. Smaller positions, no leverage, clear stop-loss rules. And one rule, above all, never believe you're smarter than the market, because markets reward patience and punish ego. $5 million didn't disappear in 48 hours. It disappeared in decisions made months earlier. Risk layered on risk, confidence layered on confidence, and one moment of panic that triggered everything. In finance, the fall is rarely sudden. It's built quietly, trade by trade, choice by choice, until gravity takes over. And sometimes, the most expensive lesson in life is believing you've already mastered it. Faith to black.